This is the Creating Wealth Through Self-Storage show by Mark Helm. Nothing Mark shares with you guarantees your success in the self-storage business. This is for informational purposes only. There are no calls to action, and nothing said or implied is a call for investment money into self-storage or any other asset class. You are responsible for your success in the self-storage business or any endeavor in life. Enjoy the show, and here is Mark Helm.
Well, let's talk about raising money for your first self-storage deal. My name is Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Quickstart Academy, which houses the training that I offer the small investor who wants to get in the self-storage business or who wants to grow their self-storage business. You can find out more about the free training I offer, as well as the courses, the paid courses I offer at creatingwealththroughselfstorage.com. Hit the store tab. One of the courses you'll see in there is fundraising for the small self-storage investor, which is what we'll talk about today. So if you're getting into self-storage business, or you found a self-storage deal that you're excited about, and you're getting ready to put it under contract, congratulations. However, if you don't have enough of your own money or your group's money to close on the deal, you may be thinking about raising money to do your first self-storage deal, or even your next self-storage deal. Well, basically, there's other ways, but basically there's two main ways that small self-storage investors, particularly if you're doing your first self-storage transaction and you need other people's money in your deal, there's basically two ways that I see to do it. One is with partners, and one is with investors. And let's talk about that today. For most of you doing your first self-storage deal, particularly if you don't have a lot of real estate experience in, let's say, other asset classes or in single-family homes and putting partnerships together, I highly recommend partners as the way to go, or at least seriously look at it. First of all, it reduces a lot of liability for you as the person who's found and underwritten the deal. I'll explain more about that later. Usually, everybody who's involved in a partnership has the same type of ownership. You might not have the same amount of ownership, but you have the same type of ownership. And usually cash flows, profits, cash calls are determined by the percentage of ownership each person has. Now, that's not always the case, but that's usually the case. Usually in partnerships, all members are on the loan. If you're not, then you probably have less percentage ownership, but usually all members are on the loan. That spreads or reduces your risk because you have other guarantors with you. So the name of the game when you're looking for partners to invest money with you is to find a self-storage deal that works. Underwrite it in such a way that you're showing the strategy that you have for it, the upside and the profit and cash flows you intend to create, and be able to explain the deal to potential partners in a way that excites them and gets them to say, yes, I want to play that game with you. Many of my past 477 episodes talk about how to do that, how to underwrite it, find partners, and create a story around your project. So what makes a good partner? Well, first of all, you're looking for people who are still trying to create wealth, trying to improve their net worth through real estate investing. And in particular, self-storage investing. But this could be another partner's first foray into self-storage. But you're looking for people who are trying to grow their wealth using real estate. These people are usually actively looking for deals. I've found them on social media, through your sphere of influence, going to real estate organizations such as an apartment owners association in your town or marketplace or area. any place that people actively engaged in commercial or investment real estate gather, exchange groups, apartment associations. Those type places are great places to look for and meet people who are actively growing their net worth using real estate and investment real estate as the vehicle. Now, when you're talking with somebody, whether in a social setting or in a presentation of your offering, be sure to focus on what your strengths are and what you're bringing to the table. Whether it's finding deals, whether it's underwriting deals, whether it's managing it, the courses you've taken in self-storage, whatever you feel your strengths are in executing the particular deal that you're going to be talking about. I've also found it's important for you and your partners to have somewhat the same goals in mind, like how long have you owned it? How long you're going to own it? What type of loan everybody's comfortable putting on, whether it's an SBA loan with maybe a little higher leverage, or whether some people don't want to be on loans over 65% loan to value. Make sure that your partners are all kind of aligned together with the same expectations. Talk about what you see as the potential exit strategy from the deal and make sure that they're aligned with that. In other words, your goal might be to do a value add play, create the value and sell it in 4 to 6 years, whereas another potential partner may be wanting to be in a storage deal for a long time. Make sure your goals are aligned. Also, make sure you discuss what roles and responsibilities each partner may or may not have. So, for example, who's going to be in charge of generating the tax documents and getting the K-1s out in a timely manner? Who's going to be making the tax matter decisions? How do you all determine when to sell? Have all those kind of conversations, and this is where a good attorney comes into play. Before you make your first presentation, I would have your attorney picked out, someone who's adept at and has a lot of experience in creating partnerships and LLC operating agreements for these partnerships. And I suggest you have a LLC operating agreement ready to go. Now, if this is your first deal, understand that you very well may have to negotiate some terms in that operating agreement, but I would have the operating agreement ready to go, so if somebody says, I'm interested in doing it, at that point they get the operating agreement and they and their legal counsel will go over it. My experience is usually in your first deal or so, you're negotiating the terms of your operating agreement, but by the time you've done 2-3 deals, you pretty much have your operating agreement and your history and track record in the storage business. Now, I've done many deals this way with partnerships, and I like it. Usually our LLC members all have the same type of ownership. It's a member-managed LLC, which means I'm not necessarily the manager of the LLC, which reduces my fiduciary responsibility, my legal liability. And we're usually making joint decisions together. And if it comes down to it, our percentage of ownership in a vote determines which way a particular question may or may not go. Often, I can get imputed equity, which means equity over and above the amount of money that I put in the deal, simply because I found the deal, underwrote the deal, and brought the deal to them. That's a negotiation, but I usually do get some imputed equity in the partnerships. Again, if this is your first self-storage deal and you have a limited track record in the real estate world and putting partnerships together, I really highly recommend you seriously consider partnerships as the way to go. You're looking for people who are trying to continually increase their net worth through investment real estate. Nobody has a better story about how to do that than you will in the self-storage business. Now, the other way that many people go, that I've gone, that I actually did my first deal this way, is syndications. Without getting too much in the weeds in this episode, the difference between syndications and working with investors as opposed to LLC operating agreements and working with partners is that with investors, in essence, they're handing you the money and they're stepping back somewhat to the sidelines, and it's your responsibility to take their money and generate and execute the strategy and generate the profit. You have a lot more fiduciary responsibility in a syndication than you do in a partnership. It's not that your responsibility in a partnership you take lightly, but it's just legally you have more accountability as a sponsor in a syndication. I do offer a fundraising course that goes into the details about different types of syndications and a lot of details of how I raised money and did syndications as a small self-storage investor to get going in this business. And you can find out about it at Creating Wealth Through Self-Storage. There's also a lot of other great resources out there on capital raising. There's a lot of masterminds and groups that are specifically focused on capital raising. I've been to them, attended them, been members in masterminds, and I learned a lot from them. Now, this is where you really need a good attorney to advise you from the start before you ever have your first conversation with a potential investor. A good syndication attorney will counsel with you, and together you all will figure out the best type of syndication to do, and that will determine what type of investor can or cannot go in your particular deal. Now, the difference between an investor and a partner, in my opinion, this is not a definite definition of it, but my relationship to it is a partner is someone who's trying to increase their net worth by getting in self-storage deals or by getting in investment or commercial real estate. An investor is someone who's already made their money, and what they're doing is they're looking for places to put their money that, one, they don't want to lose it, and two, they get above market returns. What's an above market return? Well, that could be usually beating the S&P 500, the Dow Jones, 30 of the largest publicly traded corporations in the country, and or the NASDAQ. If your returns are higher than those, then you're typically said to be beating the market. And that's what investors are looking for. That's why they would consider going into your self-storage deal as opposed to just putting it in a mutual fund, an index fund, or investing it in the stock market. Syndications open up a large world of higher net worth people attempting to place money in such a way that they beat the market. Now, it's important for you to know what other type of commercial investment real estate syndications are offering potential investors, so you know how to organize and structure your deal. When I got going, I looked at and attended a lot of webinars of people presenting investment opportunities, went on the website and joined a lot of groups where I could find syndications to look at, and I figured out what apartment people were doing, other self-storage people were doing, and I could see what investors were looking at in their decks. So just know that the investors that will be looking at your deal are also going to be probably looking at other people's deals too. You've got to know where you stack up. And if this is your first deal, maybe you need to sweeten the pot and offer, what I did was offer a higher preferred return, and I offered to have their capital come back to them within 5 years. I did that primarily so that my investment opportunity looked a little better than what most of my competition was at the time. Now, investors are never on loans. Usually they're not on loans. I've never seen one syndication where an investor is on a loan. If they are, they're really not investors, they're sponsors. And think about it, if somebody putting all the money in your deal and somebody's on a loan, that's their deal. You're just going along for the ride. So usually the sponsors, you, or your group, is on the loan. You underwrite the deal, find the deal, design the strategy, present it to investors in such a way that they get excited about that opportunity as one way to hedge against market turns. The self-storage story is a great story for investors because it does well during upturns in the economy and it does well during downturns in the economy. I relate to storage having part of their investment dollars in the storage industry as a way to be a hedge against when economies turn. And investors usually get that. Now, let's talk about your ideal investor. And when I first got going, anybody that breathed and had money was my ideal investor. But I learned the hard way, if possible, it's great to really be targeting particular type of people who are looking to invest money. So in the fundraising course, we talk about how to create and identify your ideal investor. So for example, I've worked with people who are airline pilots or retired airline pilots getting in self-storage. Well, airline pilots are good. You have an in that group. You have a story and immediate relatedness with anybody who's in the airline industry or a pilot that has some money, and there's no better story than the self-storage story, and you can start there. I work with people who, if you or your spouse is a doctor or in the medical industry, that could be your in to working with doctors and getting in front of doctors and doctors' financial advisors and show them the opportunity that self-storage is for them. My ideal investor, I ended up working in my first syndication with a lot of people who had sold family businesses and had a lot of money, and they wanted to invest their money so that one, they didn't lose it, and two, they beat the market. So it turned out that my ideal investor was someone who had sold a family business. They may even have been 1 or 2 generations away from the founder, but they were trying to place their money in such a way as not be the ones to lose the money that previous generations had made. Again, there's a lot of resources out there. There's a lot of masterminds and groups you can join to learn a lot about that. So from what I can tell, if you're trying to use other people's money to do your first self-storage deal, partners or syndications. That's how I got going in this fantastic business of self-storage. And I still am in partnerships in every storage deal I do. I like spreading the risk out. It allows me to be in more deals than I could be in with just my own money. And as a sponsor, it offered me the opportunity to be the ones executing the strategy, sending the checks out to the investors, owning the company that managed the real estate and making the management fees. It gave me a lot of opportunity to create income as well as creating wealth. And I've helped many investors and partners make good returns on that journey. You can too. So share with me your storage adventures and share with the group your storage adventures, and I wish you well on your self-storage journey. And that's an overview of start thinking about raising private money for your first self-storage deal. So thank you very much. My name's Mark Helm, and I look forward to being with you next week.